Hello and welcome to the Mortgage Life podcast.
Yes, it is June 4th, which of course means that it is Wednesday. Oh, hang on a sec. There's something more important about Wednesday.
Yes, it is Wednesday, June 4th. Wednesdays are the Bank of Canada interest rate announcement
Oh,
days.
that's right.
Just like us, I'm sure all of you were eagerly awaiting for each of these announcements. You've landed on the Mortgage Life podcast, where we strive to bring you mortgage related info that's easy to understand.
We have conversations with market experts to bring you timely updates because there's one certainty in this industry: things change.
I'm Mindy Bodwin.
And I'm Pete Solomosi. Welcome to the Mortgage Life podcast. Okay, so maybe it's just Mindy and I that are eagerly awaiting these announcements. But we did have an announcement today, and today's is, I believe, yes, this will be the fourth one of the year. And so we're halfway through the year. Mindy, tell us, what on earth did the Bank of Canada tell us this morning?
Yeah, well, the Bank of Canada told us a few things, not very dissimilar to what we talked about last time. So, once again, the Bank of Canada has held its key policy rate at 2.75%. So, no change. And I just wanted to put up a quick reminder because we've had Brendan Ogmanson, the chief economist for the BC Real Estate Association. We've had him on our podcast a few times, actually. And he's told us that the Bank of Canada's target range for their key rate is 2.25 to 3.25. So where we're at right now, 2.75 is right in the middle of the Bank of Canada's target range.
Right. So, yeah, so basically we're kind of in the spot where we should be, at least according to one economist, probably a few. The way that this translates to you is this means that the prime rates at most banks will continue to stay at 4.95. Save for TD has a prime rate of 5.1 on certain products. They actually have two different prime rates. And so if you've got a variable rate mortgage or an adjustable rate mortgage or a line of credit, that prime rate will remain the same.
And so let's talk a little bit about why. So why did the Bank of Canada do this? Why are we holding again? Why didn't we drop the rates? I mean, there are a few parameters at play here, but the biggest word is uncertainty. And not to bring political rhetoric into this, and this is not a political, but I thought this was very it was very descriptive of the state that we're in. So have you heard the TACO acronym?
I like tacos.
Yeah, so Taco Tuesday yesterday, but
Okay.
obviously Trump did announce some new steel tariffs. And
All
what
right.
this acronym means, it's Trump always, chickens out, is what they say. So the gist of this is this uncertainty really stems from, we have the tariff come in and then the tariff goes away and then a new tariff comes in and then it's lessened or whatever. So this is the state of our economy, and this is where a lot of this uncertainty is coming from.
So in their interest rate report this morning, the exact wording, so save for the first sentence, where the first sentence basically says we're keeping our rate at 2.75. The very next sentence says, since the April monetary policy report, the U.S. administration has continued to increase and decrease various tariffs, period. So this is exactly your point, that things remain very uncertain.
Mm-hmm. Yes. And I think there was another, maybe we can, it's not just tariffs, right? I mean, this is, a bit of a psychological game, but there's other factors at play here too, Pete. I think they kind of went into a little bit more description about how it's affecting the Canadian economy.
Right. So the tariffs, what they tend to do is basically the uncertainty in adding a tariff, which is like adding a tax, is that it increases prices. So if we're trying to export goods away, well, that is difficult for our manufacturers. And if our manufacturers don't do well, then it decreases our GDP. And if our GDP decreases, well, that is a sign of potentially recession. So if we decrease our GDP enough times in a row, that is a recession. And typically, recessions mean that things would lower in terms of rates because they want to stimulate. The Bank of Canada would want to stimulate the economy. So on that side, that's what's happening. On the other side is if there's tariffs and they increase the price of goods, well, we all know that the CPI, or the inflation number, is the average basket, or the average cost of a basket of goods. And if all those goods are now increasing in price, well, then the inflation number goes up. And if inflation goes up, then the Bank of Canada tends to raise rates. So we have these two things pushing and pulling. And so this is where we're at. All that being said, there is a very interesting paragraph near the end of the report that really summarized nicely what exactly is happening. So here we go. Here's the quote. With uncertainty about U.S. tariffs still high, the Canadian economy softer but not sharply weaker, and some unexpected firmness in recent inflation data, Governing Council decided to hold the policy rate as we gain more information on U.S. trade policy and its impacts. We will continue to assess the timing and strength of both the downward pressures on inflation from a weaker economy and the upward pressure on inflation from higher costs.
So, to sum it up, there's sort of three big things at play here. Number one is that uncertainty around the US tariffs, taco. Number two, the Canadian economy is softer, but not as dramatically as one would assume. And three, the recent inflation data is actually showing a slight increase. So these are all kind of working against each other, and this is why the Bank of Canada held their rate steady.
Right. And if we went back a couple months, even 3 months, we had a very, very different outlook at that point, because it looked like things were going to be much more difficult for the Canadian economy. It looked like that recession was nearing, and we didn't really necessarily know that any of these inflationary pressures would be there. So here we are 3 months later, and it's a very different picture, but we're still kind of in that spot that most economists thought we'd be in. Again, referencing back to Brendan's comments, we're there. There still is the potential. We've got 4 more announcements this year for rate cuts.
Yep. So next announcement is July 30th. So come back and listen. We'll see what happens. This is The Mortgage Life.
We look forward to continuing the conversation.
So come back and listen.